If you've been keeping a close eye on the news and your weekly shop, you might have noticed that the price of things is going up. A liter of unleaded petrol is today almost 50% more expensive than a year ago, and household energy costs increased 54% in April 2022 alone, while even crisps and soft drinks are becoming more pricey. So why are prices going up all of a sudden? The answer is something called inflation, and a whole host of countries across the world are experiencing what some people are calling an inflation crisis. Very simply, inflation happens when the costs of things increase. Inflation isn't always a bad thing, but when prices increase too much or keep rising for too long, it can present some problems. So, what's really going on? Many countries around the world are struggling with inflation, and one of the biggest reasons for this is the pandemic. When COVID-19 struck, countries around the world were forced into lockdowns, factories shut down, workplaces closed, and many businesses stopped trading altogether. During this time, most governments stepped in to provide massive investments and support to keep people out of poverty and to keep the economy alive. Many households built up unexpected savings as a result of having fewer opportunities to spend when working from home and the shops being closed. The problem is that with many countries around the world still facing strict COVID-19 regulations, lacking access to or uptake of vaccines, or continuing to dip in and out of lockdowns, there just aren't enough products to go around. Despite all the money going around, businesses can't quite keep up and prices are going up as a result. A more recent driver of inflation is Russia's ongoing conflict with Ukraine. On the 24th of February, Russian military forces invaded Ukraine to overthrow the democratically elected government and replace it with a Russian puppet government. Before the invasion, Ukraine accounted for 11.5% of the world's wheat crop market and contributed 17% of the world's corn crop export market, and the invasion caused wheat and corn from Ukraine unable to reach international market, causing shortage, and result in dramatic rise in prices that exacerbated to foodstuffs and biodiesel prices. Additionally, the price of Brent crude oil per barrel rose too. This caused petrochemicals and other goods reliant on crude oil to rise in price as well. While most countries saw a rise in their annual inflation rate during 2021 and 2022, some of the highest rates of increase have been in Europe, Brazil, Turkey, the United States, and Israel. By June 2022, nearly half of Eurozone countries had double-digit inflation, and the region reached an average inflation rate of 8.6%, the highest since its formation in 1999. In response, at least 75 central banks around the world have aggressively increased interest rates. What does inflation impact? Everything. As consumers all need to start paying more for day-to-day items, households will increasingly find their money is worth less. After all, if everybody has to pay more for the grocery shop, there's less money to spend on other things. One of the most common ways central banks and governments try to combat inflation is by changing interest rates, the amount of interest you will earn on your money when placed in a savings account. If the interest rate goes up, people will save more and spend, making item shortages less acute and, in theory, bringing prices down. This will also impact things like mortgages though. Higher interest rates can mean the amount you will need to pay on a mortgage could increase. Who benefits from inflation? While consumers experience little benefit from inflation, investors can enjoy a boost if they hold assets in markets affected by inflation. 1. The energy industry. This won't surprise you if you own a car and fill up your tank on a regular basis. Crude oil prices and other energy prices increased in 2021 as increasing COVID-19 vaccination rates, loosening pandemic-related restrictions, and a growing economy resulted in global petroleum demand rising faster than petroleum supply, and also one of the main reasons is Russia-Ukraine war. The result is that oil and gas producers are making record profits, and their stocks have been market leaders. 2. Electric vehicle manufacturers. After years of ho-hum sales, companies that make electric vehicles, or EVs, have a lot to celebrate. New car sales of electric vehicles in the second quarter of 2022 climbed 13% over the first quarter. EV sales hit a new record, one potentially driven by motorists weary of high gas prices. More cars would have probably been sold, however, if electric vehicle manufacturers weren't struggling with shortages of semiconductors, which are vital components of an EV. But if inflation continues to push gas prices up, expect demand for EVs to continue. 3. The food industry. Generally speaking, Inflation has been kind to the food industry. Not everyone, of course. Talk to any restaurant owner, and they'll tell you how they've been crushed by the pandemic and now inflation, given that customers were first afraid for their health if they dined out and now afraid for their pocketbooks. But food manufacturers, like a poultry processor? They're doing nicely. Food prices have risen over 10% over the past year due to a variety of factors, many of the same ones that have affected energy prices, Dishon says. Russia and Ukraine account for about 30% of global wheat production, and the war has led to a large reduction in output and corresponding leap in prices. As a result, many food producers have benefited from rising prices. 4. Borrowers with existing fixed interest loans. Plenty of current and future borrowers won't benefit from inflation, but people who have already borrowed money and are paying back low-interest loans with fixed rates have something to be pleased about. Those with fixed-rate mortgages or student loans may not exactly be celebrating inflation, but they are somewhat shielded from its more deleterious impact. 5. Collectors. Historically, collectibles such as fine art, wine and vintage automobiles have benefited from inflationary periods of time as the dollar loses purchasing power. If you're a fine art investor, you could be sitting pretty soon. The trading platform Masterworks crunched the numbers from the last major inflationary period, 1973 to 1981, and concluded that during this time, the value of an investment in art went up more than the value of gold. Thank you for watching my video. Please like, share and subscribe my channel.